Hello, this is John from pdftax.com. Today we're looking at the Form 1065 Partnership Tax Return. And the form that we're looking at on the screen right now is the official government form that was downloaded from the IRS website, but it's been enhanced in a couple of ways. First and most obvious is these green or yellow navigation buttons. So if I click here, it takes me to the cost of goods sold form, but I can get back to page 1 like that. So let's just work with this form a little bit and see how it works. First thing we need to do is put in a business code number. So that's what I want right there, 67222511. And if I go back to page 1, I can type it in like that. Now I've created a hypothetical restaurant here, and we need to check a few boxes. We have inventory, so we're going to use the accrual method, and then we're going to say that we've got two partners, so we'll put two K-1s just like that. And then let's put in some numbers here for sales, $750,000. If I go to cost of goods sold, I'll put in $20,000 for the beginning inventory and $350 for the purchases and $135 for cost of labor. Gives me total of $505, but I need to subtract the inventory at the end of the year like that. Then the cost is my valuation method, and these two questions here don't apply, so I've marked them no. So let's go back to page 1. And I got some other costs here that I need to enter. Salaries and wages. That's going to be 105. And guaranteed payments to partners. That is essentially salary that is paid out to the partners for this business. And then on line 13, I've got some rent that I want to enter. $60,000. So that gives me $15,000 of ordinary business income. Scrolling down to page 2, we find a bunch of questions. Most of these questions are going to be no, but there's a couple yeses here. The first one is what type of entity do we have? And I'm going to check the domestic general partnership, which is the most common type. And then this one here, did any individual directly or indirectly own 50% or more of the profit, loss, or capital? And I'm putting that as a yes because we're going to have a partner that owns more than 50%. But the rest of these are going to be no. But let's take a look at this one. Question 6. There's 4 conditions here. The first condition is, were the total receipts less than $250,000? Well, we know that we entered $750,000 for our receipts, so we know that is going to be a no. And the consequence of that is that we're going to need to complete the Schedule L, M1, M2, Item F on page 1, and Item L on Schedule K-1. So that is how that works. And then going down further, we have a bunch of no's, no, no, no. And finally, we have the tax matters partner, which I've already entered for you. So that's how that works. Now, if we scroll down to the next page, which is Schedule K, we have $15,000 on line 1, which came down from page 1, line 22. And then we have guaranteed payments on line 4 of $90,000, and we have interest income of $2,000, and then going down to line 14A, we have some net earnings from self-employment. That is $105,000, which is this $90,000 of guaranteed payments plus the $15,000 of ordinary income. And then going down again, we have net income on line 1 here of 107, and we need to distribute this to the partners, and so we're going to assume that we have two general partners, and so we're going to put the 107 right there. Then on this balance sheet, we're going to say we have $30,000 of cash to begin with, and $20,000 of inventories to begin with, and then we have $40,000 of accounts payable right here, and $10,000 in our beginning capital account. Then 52,000 ending cash balance, and our ending inventory was 25, and our accounts payable is 50, and ending partner capital account is 27, like that. And let's go down a little bit further here, and we have this schedules M1 and M2, and we're going to need to fill those out because you remember we answered that question no regarding the fact that we have more than $250,000 of receipts for the year. So let's put $15,000 of income here, $2,000 of interest, and $90,000 of guaranteed payments. Then on M2 we have $10,000 of beginning balance, $15,000 of net income, and $2,000 of interest. So that gives us 27 to end at the end, which matches this right here, which is what we want. So that looks pretty good. The last thing we need to do is to distribute our income to the partners. So let's go over to this allocation worksheet here, and as you can see, I've set up two partners, Alice and Woody. Alice gets 60% of the profit and loss, and Woody gets 40. And then the beginning capital account, remember the total beginning capital account was 10,000, so Alice's share of that is 6,000. And the increases for the year are a total of 17,000. That's this 15,000 of ordinary income and the 2,000 of interest income. So 60% of 17,000 is going to be 10,200, like that. And then 40% of 10,000 is that, and 40% of 17,000 is 6,800, like that. So the 16,200 plus the 10,800 equals 27,000, which is our ending capital account. So that should be correct. Now, to distribute this income, we're going to use an allocation percentage of 60. So Alice is going to get 90 or 9,000 of the 60 of the 15,000 and 60% of the 2,000. Now let's look at this guaranteed payment of 90,000. Let's suppose that the partner agreement says that Alice gets a flat dollar amount of 60,000. So we're going to put that over here like that. And then we'll go down to Woody. He's going to get 40% of that and 40% of that, and then he has 30% of the 30,000 of the guaranteed payment. So that equals 90, which is good. And now let's go to the actual government form, which is the K-1. We'll click right here. That will take us to the K-1. So we're on K-1 number 1, and that's Alice. And you'll see this information came down from page 1. That's the partner ID and the partnership name and address, and then Alice's name and address and her ID. And if you'll notice, I marked her as a general and domestic partner with 60%, and this is the 9,000 of ordinary income and 60,000 of guaranteed payment and 12,000 our 1,200 of interest. So that all came from the allocation worksheet that we were just looking at. And the one other thing that we need to do to finish this K-1 is the self-employment income. Self-employment income are guaranteed payments plus the partner's share of the ordinary income. So in Alice's case, that would be let's see, that would be 69,000, which is this 60,000 guaranteed payment plus the 9,000 share of the ordinary income. So let's put 69,000 here, and this needs to be code A. That's from the K-1 instructions. You can see that if you look at the K-1 instructions. Okay, now let's go back to the allocation worksheet, and we'll go to K-1 number 2, which is Woody. So there's Woody right there and his ID. He's got 40% of the ordinary, 30,000 guaranteed payment, and 40% of 2,000 is 800. And he has $36,000 of self-employment income, which is 30,000 of the guaranteed payment plus 6,000 of the ordinary income. So he's got 36,000 of self-employment income. Now there's one other situation to tell you about that you might have to deal with if you have more than 6 K-1s or 6 partners. So let's go to this navigation page for the K-1s. You'll sort of notice right now we've got just 2 partners, and there's a maximum allowed of 6. But what if you have more than 6? Is there anything you can do about that? Well, there is. A little bit more work, but we can do it. Let's go to the worksheet 1 again, and over here there's a little entry box. If you change that to a 7 like that, you see all these numbers change to 7. And if I go to my K-1, I'm on K-1 number 7 now. And then I'm going to go back to my allocation worksheet. So this is a different partner, so the name will be different, and the percentages here will be different, and these will be different, and no doubt the guaranteed payment will be different. You'll need to change all that to create partner number 7, and you probably want to make a copy of your PDF file that has the first 6 partners, and then put the partners beyond 6 on a separate PDF file. So it'll be a little bit inconvenient for you to have your information on 2 different PDF files, but you can do it if you need to. Finally, let's click here to go back to the navigation page, and here to go back to the other navigation page, the main navigation page. You'll notice that I've got these error messages turned off right now, which is a good idea when you're entering your information to turn them off. Otherwise, you'll kind of go crazy with all the error messages that it throws at you. So, but at the end, you want to turn them back on. And when I do that, you see I get this error message that tells me that my total assets at the end of the year should be entered on page 1, item F. So I'll click OK, and then I'll go to page 1. Item F is right here, and my ending assets, you might remember from the balance sheet, were 77,000. So I'll do that, and that'll take care of that error message, and that'll wrap it up. I'm done. So thanks for listening.